back to another episode of Live Laugh Loans. This is episode number 14, and I'm Myra Talley.
And I'm Shelly Panzarella. Let's dive right in.
Yes. This week, this is the week of February 7th, we actually saw our rates increase about a quarter point. And that's, a lot due to the market and the news reports that have come out.
Yeah, so February 1st, we talked about Jerome Powell coming out and raising interest rates. It actually wasn't just him, but it was the Federal Reserve that did raise rates. So they did exactly what they said they were going to do, 0.25%. They are saying that they are still going to continue to raise rates. So our next increase would probably be March 22nd. That's the next Fed meeting. But what happens after that is going to be really, I think, it's going to be just dependent upon where inflation lands. He did mention that inflation is actually improving, which is good news on the horizon. But what happened this week was the jobs report, right? The jobs report actually came in better than expected, which if you think about the jobs report, it's like opposite because it's really people who are filing for unemployment, right? So they look at it based off of how many people did not file unemployment. And that actually came in better than expected, which is the reason why rates kind of ticked up a little bit this week.
I did see something, and I didn't recall what news article it was, but I saw that we are actually at the lowest unemployment rates in many, many years.
Yeah, and I think that's the part that most people are wondering how this really could lead into a recession, because typically when you go into that, it's unemployment happens, it raises, and people lose their jobs, and then obviously things become affordable and we slip into a recession. But one thing I did hear on that is you have a lot of people who are working part-time, multiple jobs. Part-time and multiple jobs. So you have, a lot of people just to make ends meet are working 2 full-time jobs, or a full-time and a part-time job, which is taking the resources for employment.
Yes.
Yeah. But that is the reason why our rates actually have gone up. And again, we mentioned that when we did our predictions on episode 12, we talked about 2023. We both agreed that we'd see rates go down, but it wouldn't be just a straight line down.
Correct.
We'd see it jagged. So this would be one of those little flips up, but still continuing in the downward trend.
Right.
Yeah. So speaking of rates, I think something that we definitely want to talk about, and we talked about this in episode 13, was the LLPAs.
Yes.
You know what they stand for? I get tongue twisted on them.
I don't know what it stands for.
So it's LLPA, Loan Level Price Adjusters, or adjustments, whatever you call them. So typically those are based off of what type of loans you do. So if it's a purchase or a refinance, where your credit scores are at, and debt to income ratio, and then also whether it's like a cash refinance.
Yeah. Even the type of property.
A property, yes, that's what so investment, second home, occupancy, and then single family, duplex. So
when people ask what's the interest rate today, it varies on all of these specific items. It's not just 7% today. It's not just a number that we throw out there. All these factors go in. So depending on your specific scenario, your credit score, the type of home, all these will play a factor in determining what interest rate you would qualify for.
Right. And so the change that's going to take place happens May 1st. And a lot of, we just presented this in one of our sales meetings, and for realtors are like, well, why does this matter to us? But the main reason it matters is because it'll affect our buyers' interest rates, right? And how does interest rates affect? We've seen it all in the last year, how interest rates affect our buyers and purchasing and such. But specific to these changes, so what we're seeing right now is 740 credit scores was the top end of any adjusters, meaning if you had a 741 and above, there really wasn't any adjustment, any specific adjustment on that. That bucket has moved up to now 780.
So they added 2 more, right? 740,
yep,
and then 760, 780.
And then 780, exactly. And so, meaning that, most of our buyers who are in the 740 range, which is still pretty high, they weren't getting any credit adjustment or pricing adjustments. Now they will see that. The other thing, which I think is pretty big, is debt to income ratio over 40%.
That's a big one.
I think so, no matter what your credit score is at.
Right.
So you're automatically going to get at a minimum 0.375 cost. So meaning that, not that it changes their interest rate, but there's a higher cost for if your debt to income ratio is over 40%. So I think that one is really big. And then the other thing that they have on here is it used to be that if you were putting a large amount down, so 40% down used to be a large number to put down, and there would be no adjustment under 40%. If now it's actually moving down, so you have to put 70% down in order for you to not have an adjustment on pricing.
So basically what they're doing is there's going to be an adjustment for just about every single scenario out there, unless you can almost pay for the home outright.
Yeah, and I mean, when I did this analogy, so I mean, what this means for us today, it happens actually May 1st, and they say deliveries into May 1st, meaning like most of our locks that would happen in April, you'd start to see this. But I believe a lot of the investors are going to start to prepare for this in interest rates. But I gave an example today. So based on today's pricing in our LLPAs, a rate at 5% down, 740 FICO score borrower, that interest rate is 6.625. In our new world, with the new adjustments, if we were to price that exact scenario, 740 FICO, 5% down, that interest rate would be 6.875, or it would cost the buyer 0.625 the loan amount to get the rate of 6.625. So I realize it's 0.25%, but that still matters, right? And that's going to be dependent upon where interest rates are at. The other thing was the debt to income ratio. So same scenario, 5% down, 745, but you now have a debt to income ratio over 40%. So that same rate today is priced at 6.625, would, regardless of what your debt to income ratio is, come May 1st or whenever we lock in for that when the adjustments are made, that same rate, that same scenario would cost 7.125 of an interest rate, would be 7.125 of an interest rate. So that's almost a half a point difference just because of their debt to income ratio. Right. So if you're out there today as a buyer and you've been pre-qualified and you're not working with cross-rating lending, because we've all prepared for this, make sure that you ask your lenders, how this will impact them in qualifying, especially if you're like at the tip top of your qualifying ability, which I think most times we're doing that, right?
Yes.
We're wanting maximizing what they can qualify for today because, we're trying to get them into the biggest house that they possibly can get into for the most affordable price. So we really wanted to share that because that is one of the big news, one of the big items that are coming out May 1st. What about credit? Let's talk a little bit about credit.
Yeah, we did see, so last year we spoke about some credit changes when it came to medical collections. And some of those are kicking in now. And so what it is, if you have a medical collection under $500 at the beginning of this year, they don't give a specific time frame, right, when they're going to start. They just said at the beginning of 2023, they're going to start to remove those collections from your credit and completely delete it, not just show as paid or anything. It's just going to clear it out from your credit history.
Yeah, which we saw improvements just in the first phase of this, right, July 1st, for our clients that actually, if you had a collection on there, you could basically, it was supposed to have fallen off if it was less than a certain amount. And then there was, then the other part was you have more of an extended grace period. So it used to be just 6 months. So if you happen to have a collection account, or the insurance company issue or whatever, you have at least now a year to resolve that issue without it being reported onto your credit. And now they're saying that the bureaus are going to omit if it's a medical collection, they're going to omit it if it's under $500 automatically without you having to do it.
Yeah, and that's a big deal because we have a lot of customers, and it happens to so many people. They don't even know that they have these collections hit their credit report.
Right.
So, a lot of the times it's a billing error. These people have insurance, they paid their co-payments, but somehow along the line there was a disconnect and now it's affecting credit. And when you have a collection, that could be over 100-point drop just from it reporting on there.
Yeah.
And then to have it, removed, they're not really willing to work with you in most cases.
Yeah, and that's the hardest part. It's if it goes into collection, you have a chance of it going to multiple collection companies, and so you have to almost like chase the next collection company. Because just because you've had a medical collection, you don't necessarily go to that doctor again because they don't even know who it's been sold to. So this actually allows it protects the consumer, I think, or benefits the consumer in a great way. But also, if you've got these collection accounts on there today and you think that this is something that you should be able to take advantage of or that it should affect your credit, definitely reach out to us because we did have some instances where we assisted our clients and getting those collection accounts removed, and that did boost their credit so that they could purchase a home. So that is something that the specific date, like you mentioned, isn't out there, but it is supposed to be happening the first half of this year, which, crazy enough, we're in the second half of 2023.
Yeah.
Yeah.
Time flies.
Yes, which this is what, tax season.
It is.
January 31st, we got all of our W-2s and 1099s, right?
Yeah.
Now we can file. Have you got your appointment?
Not yet.
No.
Not yet.
I am the one, you file pretty early, right?
I typically file pretty early.
Yeah. Even though you've got, so your husband's self-employed and then your W-2 does.
Yeah.
And you filed before April 15th?
Last year, I think I filed on April 14th.
Nice. That's good. Kudos for you.
It was still early, but
yes.
A day.
I always say that I'm like, my tax preparer doesn't even call me until like September. It's like, okay, are you now ready to file? Yeah, and not because we've got a lot of stuff going on, just because, I don't know, I feel like I've lost that date of April 15th being the actual tax season. But this is the time, right?
Yeah.
When you can actually start filing taxes.
Time. And, for any of those people that are possibly going to get a refund,
yeah, maybe this is a good opportunity for you to buy a home.
It is. And so just, I know we spoke about it before, but, there are some amazing programs that you can use and pair it with your tax refund. So Nevada Home is Possible, they announced a program a few months ago. And what this program is, it's for first-time home buyers. It provides up to $15,000 that can go towards your down payment. So you would still have to pay for closing costs. And I always give an estimate to my customers for closing costs, 3% of your purchase price. So if you're looking for a house that's $400,000, 3% of that is going to be $12,000. So again, that program, it's going to be for both FHA and conventional. Each one of them has different income restrictions. You do have to be, again, like I said, a first-time home buyer. You have to live in Nevada for a minimum of 6 months. And then based off of, the type, FHA or conventional, we can let you know if your income fits within their guidelines.
And in that, with our current environment today where we're getting seller contributions, you could technically do a $15,000 down payment on a property and then negotiate to have some seller contributions or all. So let's say they do the full 3%, and really you're going into buying a home with just the earnest money deposit. And the reality of it is, if the seller's contribution covers all the closing costs and this down payment the down payment assistance covers your down payment, you'll get that earnest money back after closing. So definitely something to consider, especially I know, tax season coming around the corner. Could that be something, even if it's like earnest money deposits are about typically 1 to 5% depending on sales price.
Yeah.
So maybe $3,500 on average for earnest money deposits. So I've seen a lot of tax refunds and returns as we've been doing a lot of these loans over the years. If that is you and you've always dreamt of owning a home, this could be the right opportunity and time.
Definitely. Don't be scared. Contact us. We can help you, at least help you create a plan so that you have something set to get you moving forward.
And that is a good point. I think a lot of people are so nervous. One, about credit. So we heard about the differences in credit. And I think that really is the difference that makes us unique, not just to toot our own horns or whatever, but I do believe that we've always been of the mindset of, if it's not today, it's when, right? And for us to help prepare you for that plan, whether it is to help you with credit, whether it is to help find resources for you to come up with a down payment, whether it's even to talk about, if you're self-employed, helping you to figure out where you need to be to file your taxes to qualify for the mortgage or home of your dreams. It takes you taking action and making that one simple step of just contacting us. And we're pretty easygoing, easy to talk to, and definitely are here to help you. All right, so I think we've wrapped it up as far as all the loan stuff. I think we should talk about some of the live and laugh stuff.
Yeah,
so
let's do it.
You guys went to Disneyland this weekend, and I think that's a cool thing. You have to talk about the whole experience.
Okay, so in celebration for Valentine's Day, which is right around the corner.
Yeah.
Disneyland has this event called Sweethearts Night. And what they do is they close the park off early. They close, I believe closing time is 8 p.m. And then at 9 p.m. all the festivities start. So they have character couples. So, you can see Beauty and the Beast. And then they have photo opportunities. Lady and the Tramp, the whole spaghetti thing. Stitch and Angela. Rapunzel was one of them, and then you had like characters just walking throughout the park who didn't have like a couple.
Yeah.
So you basically stand in line, you take these photo opportunities, the whole park, like the castle, and it's a small world. It's all like hearts covering the whole thing, and they have special snacks, like strawberry cheesecake churros or stuff like that, heart-shaped cookies or whatever the case is, and it's just so sweet. All the rides are open. It's pretty much like walk on, so no wait time, and it's just like a unique experience, and it's just so like you see all these couples and they're like matching and they're so cute, and it's just very sweet, and we had so much fun. The park stays open until 1 o'clock in the morning, and it was just like definitely like a cool experience.
Was it an invite only, or how did you find out about it?
A special ticketed event. I'm not sure how I came across it. Maybe my husband did, I'm not sure. Yeah. And so we were already planning a trip, but we postponed it like a week or two because we found out about this event
to go to.
So it was definitely nice.
Yeah. Did you guys dress up as a special character or theme?
No, there was a lot of couples that were dressed up. We didn't. I wore like a pink sweater. He was supposed to wear a red sweater, but it just didn't end up working out. Shipping got delayed. The sweater got lost. The sweater came in the day we got home.
Oh, that was for expedited shipping too.
Yes,
right?
Yes.
Well, at least you guys got to enjoy that. It sounds like all the pictures look amazing.
Yeah.
I never have even heard of that event there at Disneyland. So, but anytime you can close down Disneyland and it's pretty much just you in there, not just you, but it's a limited amount of people in there, is a win in my opinion.
Yeah, definitely. Especially, you can either go, characters are not your thing. It's also, you can go starting at 6 p.m. But around 8 o'clock the lines start dying down. So if just rides and you want the walk-on experience, who wouldn't? That's a lot of hours that you can do for rides in that amount of time.
Especially because there's nobody there. So they shut down the park. Everybody else's general had to basically leave unless they have the special ticket. Yeah, that's awesome. That is definitely something I'll be looking forward to. I want to see if I can do that because I'm a Disney buff. Like I love to go to Disney, and so to see your pictures and such, that looks so sweet.
Yeah, it was
so cool. Yeah. What are you doing? So speaking of Valentine's Day, we wanted to kind of post this out there. So you mentioned that you typically get or usually for Valentine's Day, people get chocolates or flowers. Mm-hmm. You get both?
Yes.
But you get chocolate covered strawberries.
Yes, chocolate covered strawberries. Those are my favorite, my absolute favorite. And if I had to pick flowers or chocolate covered strawberries, I would always choose the chocolate covered strawberries.
Yeah, actually I'll do. So I think last year Sydney got me, or I don't know, it was Sydney or Rich, one of the two got me chocolate. We all got chocolate covered strawberries, and I think I was the only one that ate them. So you're right, that's actually better than the chocolates.
Yeah.
So you prefer the chocolate covered strawberries, and you guys don't go out, right? You guys usually.
We typically cook at home.
Yeah.
We'll do like a nice little fancy dinner, apple cider with like the kids and stuff.
Cute. Oh, so the girls are there too.
Yeah.
Awesome.
So this year we actually changed it up and made a reservation.
What? Yeah, I love like dining out. Not dining out. I love dinners.
Same.
But I love to go out to dinner, so we are going to go out for dinner as well. And our house is almost done, but my daughter's having a Galentine's dinner with her girlfriends at home or at our house, so they're going to be able to take part and use our new one of those waterfall kitchen counters, and they're going to do it up on that. I think they're doing cookies and a buffet spread and stuff like that.
Are they making it, or are you having
I don't know, actually. They've not included us in it. They just asked us when we are going to dinner, so that window, exactly, that window of their opportunity for them. I think they're going to watch the You episodes or series or something like that.
Oh, okay.
I don't know.
You season 3? Is it going to be out by then?
Yes. Okay. It comes out. Yeah. Whatever. Right before that. So we will be enjoying a nice dinner, and I do like chocolate covered strawberries, but I usually don't like the flowers because I'm super allergic to them. So the dinner definitely is my thing. So whatever it is that you guys like to do for Valentine's Day, or whatever you've done for Valentine's Day, because this will be airing after Valentine's Day, post the comments below. Let us know what you did, and then let us know also if you've gone to this. Is it Sweetheart's Ball or Sweetheart Sweethearts Night at Disney. Share your experiences with us as well. And that wraps up episode 14 for us. Make sure you like and subscribe. And if you like this information, share it, pass it along to all your friends. And we'll see you on the next episode. Bye.